the $83 billion trade-in opportunity in U.S. homes. The next growth engine in consumer electronics may not be a breakthrough product, but the devices consumers already own. New research from Alchemy, conducted in partnership with CCS Insight, estimates that U.S. households are sitting on $83.74 billion in unrealized trade-in value tied to unused electronics. At a time when upgrade cycles are lengthening and margins are under pressure, the findings position trade-in programs as a commercial strategy rather than a secondary sustainability initiative. Census-wide data cited in the research shows that the average U.S. household holds 2.43 unused devices, each with a perceived value of $255.68. Multiplied across approximately 134.8 million households, the cumulative figure approaches $84 billion, effectively a dormant secondary market. Demand exists, but activation is inconsistent. Consumer openness to trade-in is not the primary constraint. Among more than 2,000 U.S. consumers surveyed, 90% said they have either traded in a device previously or would consider doing so. However, execution at point of sale remains uneven. Nearly one-third of electronics buyers report they were not offered a trade-in option during their most recent purchase. Even within smartphones, the most established trade-in category, only 61% were presented with a trade-in offer during their last upgrade. Just 44% ultimately completed a trade-in, leaving 58% of devices neither recycled nor monetized. This disconnect between consumer intent and retail execution represents both lost revenue and stranded device value. It also suggests that standardization and visibility at checkout remain underdeveloped across channels. Beyond availability, consumer hesitation centers on three key areas: perceived fairness evaluation, cited by 27% of respondents; data security concerns when relinquishing devices, cited by 25%; limited awareness that older models retain residual value, cited by 22%. Each of these barriers points to operational and communication gaps rather than a lack of underlying demand. Trade-in as a revenue and retention lever. The research indicates that structured trade-in programs can materially influence purchasing behavior across the funnel. 71% of respondents said an attractive trade-in offer would prompt them to upgrade their smartphones sooner, shortening the typical upgrade cycle by an average of 6 months. In addition, 68% indicated they would opt for a more premium model if offered trade-in credit above $270, suggesting upsell potential tied directly to valuation strength. The impact extends beyond device choice. 62% reported that trade-in-driven affordability would increase their likelihood of purchasing accessories or extended warranties, supporting higher basket size. Meanwhile, 84% said they are more likely to remain loyal to a retailer or brand that provides competitive trade-in value. For OEMs, carriers, and retailers operating in a maturing hardware market, these dynamics reposition trade-in as a measurable acquisition and retention tool. As differentiation between flagship devices narrows and service revenues face scrutiny, recapturing residual device value can help offset customer acquisition costs and support margin stability. The opportunity is not limited to smartphones. Adoption remains relatively low in adjacent categories, with participation at 20% for kitchen appliances and 14% for floor care products. Yet more than half of consumers in these segments express intent to trade in devices in the future. For manufacturers outside traditional handset markets, this signals potential to use trade-in as both a demand stimulus and a pathway to premium product adoption. The broader implication is clear. The market appears ready, but scale depends on consistent execution. Transparent valuation models, proactive point-of-sale integration, and simplified processes will be critical to converting consumer willingness into transaction volume. In a constrained growth environment, systematically unlocking the value of devices already in circulation may prove more commercially pragmatic than relying solely on new product launches.